In this video, we will talk about Bionano Genomics, trading under the symbol Bngo, where the stock is, where I believe it is heading towards, and if you should buy its shares. Before today's video begins, if you like my content, please like, comment, and subscribe to my channel. Over the past few months, Bionano Genomics has had an amazing bullish run, with its stock price increasing by more than 1,500% from the days when it was still a penny stock. Looking back, it seems to be a very far cry from where things were just a few months ago, when the company was not even sure if it will still remain on the Nasdaq. Since then, the stock really took off and is now trading around $8 level. The main catalysts during this period of time have been encouraging news from research community and the rumors about ARK investing. The good news from the research community is that they say the Bngo solutions are more cost efficient and faster to detect genetic disorders compared to competitors. This means that there may be more demand in the future coming from medical facilities to use Bionano products to address some disorders, especially on the autism spectrum. The other catalyst is the rumor that ARK, the ETF that has gained so much value over the past year, may be investing in the company. The hints are the following. ARK has an ETF that is actually specialized in genomics, called ARKG. This ETF has been buying a lot of genomic stocks, many of which are Bngo's competitors. The other aspect many people picked up on is the chit-chat on a social media. Bionano posted a tweet about their latest research results, and it was picked up by one of the analysts at ARK. Many people assumed that since ARK is acknowledging the company's accomplishment, it is reasonable to assume that they are going to invest in it. So far, ARK has not invested in Bngo, possibly because by the time they find out about the value in the company, the stock price is already higher than what they are willing to pay for. This should be something to keep in mind for all of us going forward, whether a stock should be bought when a lot of people want to buy it. It is particularly relevant to the current period of time because there are so many stocks that simply skyrocket without giving the investors an opportunity to build a position at a decent size at a low price. This is also because the stock used to be a penny stock, meaning that its price can be very volatile when the trading volume increases. Even if ARK chooses not to invest, there are still quite a few institutional backers of the stock, including Vanguard, Julius Baer, UBS, and JP Morgan. In fact, the number of funds holding Bngo shares increased from 24 to 28, and the total number of shares held more than doubled, going from 3.9 million to 8.4 million. This should be an indication that a company is serious in its endeavor and that it does have true value for the investors. Looking forward, there are two additional catalysts that may push the stock to higher levels in the future. The first one is the American administration's intention to spend $400 billion in genomics research. Although it is unlikely that it will all go in Bngo, there is a high chance that it will benefit the sector as a whole, including Bionano. The second catalyst is the nomination of Eric Lander, who is a geneticist, as the new administration's science advisor. Some people interpret this nomination as a signal that genomics will play a more prominent role in the medical field, which will once again benefit Bngo by stimulating interest, exposure, and demand in the company's work and potentially investing in its equity. Personally, I believe that the prediction of Cathie Wood, founder of ARC, does have a point. She predicted that genomics can possibly see its value increased by 5 to 10 times in the decades to come. Indeed, the potential is there, and the technology is improving as time goes on. The only thing that I want to add is that this growth may not be linear. In other words, there may be multiple appreciation and depreciation cycles before the sector really takes off. It will not be something that will happen in the short term. This is why it is important not to rush in and buy all the genomics shares you can see, because the current price level may be inflated. When we look at the current price action, I would say that the stock price is in the middle of a huge bull run, and that if we were in a normal market environment, it would be fair to assume that a price pullback is imminent. However, the current environment is far from normal, and nothing can tell us that the stock will not jump to a much higher level in the weeks to come. When we look at the options market, the options for February 2021 clearly indicates that the market consensus believes that the stock will go higher. In fact, when we looked at strike price of the contracts being bought, there are huge orders for the strike price of $8, $9, and $10. This means that those who bought the call options at the strike prices believe that the stock will go beyond $8, $9, or $10 before February 19th. Keep in mind that the options market only suggests what the investors wish to see, not necessarily what will absolutely happen. My recommendation is to hold the stock if you already have a position in the company, and to start building a position if you haven't. At the current price level, I think that the stock is due for a major correction in the near term. But because the market is not normal, the stock may also just keep going higher. So my recommendation is to buy 20% of your allocation now and to leave 80% for later. It is hard to predict where the price will be in a few months, but I believe that it is a stock worth holding for at least the next 12 to 24 months. Because the company is in an innovative sector that is relatively unexplored, I would recommend a maximum allocation of 2% of your portfolio. Thank you very much for watching. If you like my content, please like, comment, and subscribe to my channel.